Hey folks, welcome to Wednesday, the 13th of October, 2021. And yeah, we have a very, very sleepy morning here in the European session. So DAX is actually just over the last kind of 30 minutes standing up about 0.6%. Nothing really fundamentally going on. I think yesterday failure to push and test the 200 EMA as support, generally indicative that buyers are coming in here a little further above there, and the retracement of the woes of last week is pretty much on for equities. We had a breakdown on the euro yesterday. A lot of people on the shorts in the euro yesterday, retesting now the key area, but just not really providing the resistance that I was certainly looking for. Cable, pretty positive data out of the UK on GDP this morning, coming in with a beat there, and yeah, you're seeing cable upside quite late to transpire, and really it's only starting to lift on the weaker dollar. You're also seeing gold taking advantage of that with T notes and bonds coming out of the Asia Pac lows also. The big ticket for today is the core CPI reading out of the US. The month on month set to come in 0.2%. Year on year set to come in at the whopping 4%, which is well above the 2% target that the Fed would normally target. And, I think the markets really are poised, waiting for that. Um, you know, really nothing breaking now. From about 7 a.m. After the 7 a.m. data, nothing going on until half one now. We do have actually, sorry, just to pull back on that. I think we do actually no, we don't have we have 10 a.m. data. Yeah, we have industrial production data out of the Eurozone coming out in about 25 minutes, so it's 9:34 a.m. here in Dublin. So let's have a look at these charts and see what we're looking at. Euro on the daily, really support coming in from the week of the high of the week of the 8th of June 2020. That's the 15,645s, and the market just is not able to push and hold below here. These are weekly bars, but you can see right now, top left on the 60 minutes, this market is just not really able to do it in terms of holding on the shorts below there. I'll just kind of go down to the 15-minute, and you can see the market did try to dip earlier on this morning, but just not able to hold that dip. It's by no means breaking out above this sort of recent trend that we have here. Um, I think really good quality breakdown yesterday in this market here. You can see came in at about 20 past one around the gold pit open. Actually, don't think there's a correlation there so much maybe on the dollar, but yeah, and then getting that pullback here and looking for that short at that point after you get the breakdown in phase one, then you get the pullback in phase two, and you could have been on that short playing this down into the lows of day, but we really did. Once Asia started to open up, we kind of came back up, and this is where we sit now on the bounce. So we'll probably leave this on the 15 minutes for the day, actually, because it's quite a slow market. um, Let's see. Yeah, cable, pretty tricky actually on that positive data. Nothing really, if anything, selling came in there on the, well, actually, sorry, on the 7 a.m. candle. Um, 7 a.m. candle, we were coming out of the lows and now tacking on some higher prices on the day for cable up about 0.29%. But we do have that weaker dollar down below S1, giving a lift to all these dollarized assets. Um, gold as well lifting here. Really, what do I like about gold? I mean, I like the range. Pull back onto the 1752 spot fours and just below, which is really S1, 1750 spot six. I don't know if you're going to get that. Obviously, if this dollar does continue to drop, gold will continue to rise. You see T-notes also, if you're tracking that real yield scenario, see T-notes down here. Well, pretty much at the APAC high, 131 sevens, trying to get above this area. But I did note this morning on the weekly bar is that we're in this sort of a knot of an area on T notes, in that we have the sort of multiple weekly highs of the 12th of April and the week of the 19th of April, giving us the top of this area, and then the high of the 17th of May, giving us the low of this area. And so you can see on T notes down on the bottom right here or left here that it is working quite well as a line in the sand for this market. Do you want to build a short position into this? Uh, I don't know. Yeah, I think so. Until we get to November, Fed meeting, I don't really see any reason why people would be piling back into the bonds. Um, the real yield seems to be, the hot ticket for people to get into in this falling tech climate. To kind of seek out the real yield, a higher real yield than your kind of frothy speculative tech profit. So let's look at these US markets and the Nasdaq on the daily. The condition really here for me has been, well, since last week, the inflection into this uptrend. Do feel free to look back at the prior pre-US videos for these levels. But you're on the daily bar chart here. Huge inflection, huge, a Trump size huge inflection, 4th of October, lows of day, confluent with that high here on the 24th of June. Really nice area to get involved here, and you're putting on some serious profits on a trade in that area. Stopping out just below low of day. Where we trade now, I mean, that's yeah, it's about $11,500, 8 to 1, 8.5 to 1. Trading that back up into the 20 EMA even, is yielding you about 23 grand. That's 16.5 to 1 on your trade there. 138 ticks. I mean, that's like way too big for me. That type of risk when I'm trading intraday and trying to get size on. I mean, that's just like maybe 40 ticks, but even at that, that's quite large. But you could easily have massaged the entries here, and you're getting double digit risk reward returns. So, do I think we're just going to continue to go up on this market? I actually do. I actually do. I mean, it's not filling me with a ton of hope over the last couple of days, like from a technical perspective. But really, I'm just, I think I'm staying with the condition that we have traded into the trend. We will continue to bounce, and we've just seen a pullback over kind of the last 3 days of trading off of the 14,987's tops. So if we were to come down on the short side and retest the trend here, I think a fourth test. We had one, two, three tests on this trend back there in the 4th, 5th, 6th of October. I think a fourth test at this time, that's not really going to be giving me warm fuzzy feelings about the bounce on here, to be honest. But I think look, we have the 14703s here as a nice little level to really see when wait for this market to like push above, drift back, and then put a floor in here and then start to, basically make a move for higher prices. So I think that's the sort of activity I'd like to wait for. I don't want to be trying to buy this thing while it's compromised, testing the R1 underneath the 703s. Um, Maybe if you got a clean reversal back to pivot, test, and then push, or the retest on pivot, I think would be quite appealing to then play for the break above the 703s. Um, that's the Nasdaq. SPOOs. I mean, look at the floor on this market right now. Look at the floor on this. The low here of the 22nd of September came into play yesterday, pretty much low of day, confluent with the 100 EMA. So you can see that 100 EMA exponential moving average. Um, do yeah, it's a really good floor now for me. So actually, I do like the longs. I do think we'll trade the 20 EMA, which is above here. I'll just show the overlay of the 20 from my daily bar chart. It's actually complement with the 43.74.50s that you can see on the daily chart here. I do like that trade. I mean, I think one thing to note is that the buyers have it all to do in getting back into this range, right? You see here yesterday, it just, market just could not do it. Could not do it. Came back up here about 1 o'clock, came into the open, and we just sold right back down into to try and test on the 43.21 and a quarter. So, look, excess on the lows and APAC lows this morning. I think we continue to push on here. I don't really see any reason why fundamentally we should keep going down in equities at this time. But obviously I'm 100% open to that, and if it does happen, I'll be certainly probably standing aside and waiting to see where the market bottoms out, and not really putting myself under the pressure of having to kind of shoot that small bird in the big sky of trying to nail the short, exactly when it happens for the big move down. um I think, yeah, look, buying up good value indices, when they're a couple of percent down on the day. I mean, I think there's money to be made consistently doing that when you're in sell-off time. So that is the SPOOs and the Dow. Let's have a look at the Dow. Where is it? There it is. Yeah, I mean, really sandwiched between the highs of the 10th of May, 20 this year, and then if we kind of go back here and have a look on the high of the 16th of April, and I've kind of picked these levels because there are kind of multiple, is a bit of a line in the sand, like you can see it at these levels. Um, that kind of makes sense. While it hasn't been great of late, I still think there are buyers or sellers willing to commit quite a bit at these levels. So like, for example, on the high here, you can see quite a bit of activity, where we had kind of put in excess on these days here, and a lot of excess here, for example. So good trade opportunities to be had if you're willing to kind of wait for the rhythm and the timing of the market to show you what it's going to do. Um, I think a retest in the 50, while we didn't get it to the tick yesterday, I think we will get it today. I mean, there's a little bit of a trend from here. If I blow up this 60-minute chart, you can see you've got, well, a couple of things. I'll just tidy this up. Um, but you got a trend here from the low of 9 a.m. Friday to the low of uh, well, the opening low actually on Wednesday the 6th, and that kind of gives us this trend up. And so what I do like to see is, for longs, for example, is the excess on the lows here, right? So any retesting, I'd like a bit of that for sure. Yeah, I'd like a bit of that for sure. I think, as you can see, the buyers have it all to do with the 50, but I think if we manage to push above here, um, something like this, and then pull back, I think the market will make a base out of this R1 area to then push on. Today, CPI reading, I think, yeah, today could be a good day for volatility in these markets, and worth waiting for the half one marker. Already you're seeing it making gains on the day, up 0.15%. Nothing to really go and shave your legs for, but yeah, I think, it's all being led by the DAX for sure. Definitely moving up. DAX is up by 0.7% now, right now. Nasdaq lifting 0.4% as well. So, um, oil, yeah, it's. I think oil had a fantastic week last week, and it's like it was binge drinking for 5 days, and now this week it's just kind of getting the hangover and consolidation, right? But I mean, look, I'll give you a look at the daily, right? I mean, the weekly bars. I did pick this area, sort of multiple interesting highs around the 80 spot, 90. I did pick this after the fact. I did want to just see what was 80 spot 90 to this market last time we traded there, back adjusted, was 2018. We pushed into that. We're now looking at an inverted hammer on the week. Can we slide back? Sure, we can slide back. Yeah. Build up a bit of consolidation. But looking at the 60 minutes from yesterday, right? All this pressured selling into the lows yesterday just very quickly bought back up. To put in, I think this did put in a new high on day after that. And then just kind of consolidating sideways since. So I do think that 79.80s could start to shape up as a bit of a floor. If that breaks down, we do have this sort of gap remaining below that 78.28s to 78.81s, and that was really on the reopen of trade Thursday going into Friday last week. My pit times are on this are, this chart ends at the pit closure, and then it reopens at 2300 hours with the electronic exchange. This isn't a pit to pit session gap. There are loads of those, but rather this is a pit to electronic trade open gap, right? So very important, to appreciate the nuances of what your times are, what the relative and relevant times are, for the products you're trading. So there is a gap to fill here. So just be aware of that, right? Just be aware of that. So this could act as a vacuum and a vortex for the market. Check it off, and then we can kind of continue with further upside. I'm not seeing fundamentally any reason why we should have a major sell off, but for me, even if we do sell down, let me just get my oil chart up in the background. Even if we do sell down to 79s even, uh, yeah, 79s even 78 40s, I think this market is still supportive for further upside for the rest of the year. So give you an idea of like, well, the 79s, yeah, 79s is really just $1.50 down. So yeah, 79s is kind of in and around this zone here. Gold, I mean, look, here's the range. That's all there is for me. And yeah, Dixie. Let's have a quick look at the Dixie, because this will be coming into play today for sure. On the weekly, you can see here now this mega trend. It's just knocking on the door of this mega trend and just can't kind of close above, And I think the sort of doji sort of looking candle that we had the week before is really a bit of a market top signal to me. So actually, I'm now becoming a bit of a fan of the shorts on the Dixie. We may get a reading today, a very soft inflation reading on CPI today. And I think in that case scenario, you could see a softer dollar. Anyway, we'll wait and see. All right. So that's it for me for today. Any questions or queries, do stick them in the Discord room. It's going to be pretty quiet until 1:30 today. So, yeah, if you're watching this on YouTube the day late, do please visit us at dugandcapital.com, and you can see the options for joining the Discord room there. And apart from that, happy Wednesday. Talk to you later.